Hi and Assalamualaikum to Madam Shafiqah. Today, we will be present about more trading report analysis. Our group members are FARIDAH NAJWA, NURUK HAZIRAH, and me, SURAYA. First, I will start with introduction. After the individual analysis that we have made, we came up with the best 1%, but there are 1% has 2 stocks since our members are only 3. These are the list of stock that we gain profit or loss that we have invested in variety of group in the market. The stock that I have selected are Top Glove, which is FARIDAH NAJWA's best stock. Second is My Easy, which is HAZIRAH's best stock. Third is Padini, that is mine best stock. And lastly is Current, which is HAZIRAH's best stock. From our point of view, there are definite trend, which is the market price was continually fluctuating ups and down based on our analysis. This stock has met the criteria of magic numbers, that is earning per share must positive, intrinsic value must higher than current market value, return on equity must higher 15%, PE ratio less than 15 times, and net tangible asset lower than current market price. Besides that, based on our analysis, these stocks are in the bullish market, which is the key reason why I want to invest in the portfolio.
Next, the highest score for May return is Top Glove at 3.4005, indicating potential price fluctuations that could lead to greater volatility compared to Current, which had the lowest score at 0.4452. Top Glove also had the highest standard deviation score at 2.2525, followed by Current. Regarding coefficient of variation, Top Glove topped the list at 0.6624, while Padini recorded the lowest score at 0.1458. A lower coefficient of variation signifies a better risk for asset, though it does not necessarily ensure a higher return. In essence, the lower the ratio, the more variable the trade-off.
We move to the task 3, which is correlation coefficient. So what is the correlation coefficient? Correlation coefficient is a statistical measure of the strength of a linear relationship between two variables. This table shows the company pair and correlation coefficient. So we can conclude that the best stock correlation coefficient is Top Glove with Padini because have a nearest than -1 correlation, which is -0.7208. The perfect negative correlation and can eliminate all the risks. Okay, next we move to the portfolio return. Portfolio return refers to the gains or loss realized by an investment portfolio containing several types of investment. This table shows the portfolio return. For Top Glove, expected portfolio return is 1.7003 and Padini 1.3865. So if we combine the two companies, the expected portfolio return we will get 3.0868. Lastly, portfolio risk. Portfolio risk is a term used to describe the potential loss of value or decline in the performance of an investment portfolio. This table shows the portfolio risk. For Top Glove, a standard deviation of portfolio is 0.1262, Padini 0.2022, and if we combine two companies, we will get 1.3284.
To minimize risk, it is recommended to combine assets with low correlations. In the case of Top Glove and Padini, stocks showcase a negative correlation of -0.7208. It's essential to understand the risk-reward trade-off principle, which clearly states that the higher the risk, the greater the potential profit or loss. Those who seek low-risk investment should expect lower returns, whereas those who are willing to take high risk can potentially earn greater returns. The most effective way to eliminate risks is to invest in securities that have the most significant negative correlation. Therefore, diversifying your portfolio through investing in such securities is the best approach.
Overall, the relationship between portfolio risk and return is a complex and require careful consideration. Investors must balance their appetite for risk with their investment goals and time horizon, and diversify their portfolio to manage risk effectively. So that's all from our group. So thank you.